Assassin, and today me and Notrees invite you to our TNA tutorials and classes brought to you by TradersPlayground.com, that's my site, and StockGuy22.com, that's Frank's site. Thank you, Frank, for hosting this call. This is the first TNA class, yeah, pun intended. TNA equals technical analysis. Me and Notrees believe that any person with money in the market should have an understanding of charts as well as an understanding of fundamental analysis, but these classes will focus on the charting side. By the way, this is only the first of a full suite of tutorials that will range from basics all the way up to the most advanced technical techniques. Just because today's class focuses on basics like candlesticks, support resistance, trend lines, and all that jazz does not mean that more experienced traders should ignore this class. I so often see both beginners and experienced traders get shaken out because they do not allow a candle to close, or they draw support resistance lines all wrong because they don't realize it's the body of the candle that matters, not the wick. People, have you ever been shaken out only to find out that it was a shake? You need to know what a shakeout candle is. Or the opposite, you need to not buy on what you think is a breakout only to learn it's a shooting star. This basic class, this class 1 of possibly another 7 or 8 classes, this class is the foundation of your building. So you'll need to understand this stuff before you move forward. You need to not want to build a house on a weak foundation, something a wise man told me, and he is the one teaching this class today. By the way, now that you know what we will cover in this class, you may want to know what's next. By the time all the classes have been taught, however many TNA classes it takes, we will wish to have taken you through the basics, through patterns, through spotting formations, triangles, cups, flags, etc. We will be teaching fibs as well, and then we'll go into more advanced into point and figure charting, also wave theory. We will teach these classes step by step, building block by building block, to build your skill set, to help you build your house. I hope you come to enjoy these classes. We dedicate a lot of time into them, but like any wisdom, it needs to be shared, and that is why we choose to do this. All we ask is for your attention. Get your notepads out, take notes and learn, and guys, write down your questions. Make sure you write them down, and at the end of the class we will answer them. Good luck, one and all. Also, everyone at StockGuy22 and TradersPlayground.com, you can see this class at a later date because it's going to be recorded. Plus, it will be put on Frank's site, which is StockGuy22.com, as well as my YouTube channel, which all you have to do is look up Assassin. It's the same thing as my Twitter, Assassin for everything. And with that, I introduce you to my friend and someone very new to the game, but that I believe has an enormous amount of natural talent. Enough for me to select him above all others to teach these classes. Here's Notrees today. Go ahead, Notrees.
How's everybody doing today? My name's Notrees. My real name's Travis. I'm going to tell you a little bit about myself. I'm the owner of a small tree service in the southeast. My background is very simple. I worked my way through 3 years of college, and like many, I ran out of money to finish. So I started my tree service about 14 years ago, and I was convinced, like a lot of people, to invest with a stockbroker to ensure that one day that my retirement would be there for me. To this very day, including this morning, as a matter of fact, I still hold a chainsaw in my hand at least 5 or 6 hours a day in the Florida heat. So I'm a working class family man. I'm very proud of that, and I'm sure many of you are the same. Tree work it's hot work, it's grueling work, and whether you're the owner or not, you work extremely hard for your money. I'm like most, and I do not take it lightly when I lose money that I've worked hard for. In 2007, I started noticing that after all the brokerage fees and all the other things that are tied to investing with brokers, that my investment was basically just a savings account and that it was going nowhere. My broker insisted that over the long haul that my money was in the best place that it could be. That was my first idea that brokers weren't for me. In 2008, before the markets fell, I just had this gut feeling. So I went to my broker and I cashed out my entire retirement plan. I didn't move it. I didn't roll it over. I totally cashed it out and I put it in a savings account. I knew absolutely nothing at that time about charting, technical analysis, fundamental analysis. I mean, nothing. But I did know that I should follow my gut, and I'm so glad that I did. If I had not, then my broker would have watched my account fall to pennies on the dollar, like many brokers did in those times. You guys always need to remember that nobody watches your money like you do. It's a lot like a business, and nobody watches your business like you do if you're in business, and nobody watches your money the same way. If your brokerage account fails, then your broker still gets a paycheck, and you lose money. Now we're going to get into the biggest mistake that I ever made. I was scared of the market after 08 and 09. And remember, I mean, at this time I still knew nothing and didn't even know what a stock chart looked like. So I did not enter the market at the turnaround, but no, that's okay. The education that the market gave me there was invaluable. If I'd only known then about technical analysis, what I've since learned, then I would have known not to fear the market, but instead appreciate the opportunity that was staring me in the face. I'm sure that's easy for all of us to see hindsight. But whether most believe it or not, the market always gives opportunities to those who make the time and educate themselves, which is most likely why all of you are here in this class today. I'm not going to sit here and tell you that I know everything there is to make you a successful trader, because that would not be true. But what I will tell you is that I've absolutely busted my butt to learn everything I can about technical analysis, and I'm willing to share with you what I know to be true. Technical analysis allows you to step in front of the crowd when most are still acting in fear. It allows you to confidently scale into a position at areas of support and to step out while the crowd is producing yet another round of bag holders that will likely lose. It will teach you to buy at support and sell at resistance. It will offer you low risk, high reward scenarios that will allow you to exit if you're wrong, and also tell you when to sell for profit if you're right. We will be preparing many classes on technical analysis beginning with this one. The first few will be very basic, and each class will be a building block to the more in-depth material. Today, we will begin with learning about how to recognize basic support and resistance levels and what those levels mean to us, the traders. I truly hope that all of you will take something from this. We're going to move on to slide 2. I'm first going to go over some basics on what candles mean and precisely how to know what they're saying. The first 5 minutes or so will be very basic and is for those of you who do not know how a candle is formed. First of all, price action during the day can only do one of 3 things. It can go up, it can go down, or it can stay the same. Any candle that has black anywhere in it, now that's on my chart. Some charts are different. And once you know how to read a candle, you'll know what your charting program, what colors it has in it. But for today, any candle that has black anywhere in it means that the price action either stayed the same or it went up. Any candle that has any red in it means that the price action went down for the day. Now let's take a look at some different types of candles. Everyone here absolutely has to understand what a candle is saying before reading a stock chart. It's absolutely imperative. I'm going to move on to slide 3. The first thing we must know is that the body of the candle shows color, and the wicks only show the high of the day and the low of the day. We'll zoom in a little bit for y'all. Look here in the pink circle. A white-bodied candle means the closing price of the day was higher than the opening price of the day, or that the stock price went up. The open and close are the body of the candle. In this case, there's a small wick on top, which means that the stock had a high of the day that was higher than the close. The wick on the bottom shows that there was a low of the day that was lower than the open. So every candle tells you a story. And this story is where the stock opened, where the stock closed, where the low of the day was, and where the high of the day was. In order for a candle to be white and hollow like this one, the closing price of the day must be higher than the opening price of the day. Also, it must be higher than the closing price of the previous candle. I'm going to go over that real quick. High of the day here, the open was here. The close was here. At the end of this wick, that's the high of the day and the low of the day. Okay? Now we're going to look over at the green circle. The red candle means the price of the stock fell for the day. So the closing price for the day has to be lower than the opening price for that day for this to happen. So the high of the day and the low of the day are the same as in the white candle, but the body is filled in red. So the close was lower than the open for that day. Also, to get a red candle like this one, the closing price of the day must be lower than the closing price of the previous candle. So in this one, it's a red candle. That means the price went down. So it opened here, it closed here. This would be the high of the day, and this would be the low of the day. Okay? Okay, now we're going to move on to slide 4. I want you to remember that the body of the candle has color. The wicks only show the high of the day and the low of the day. It's important to remember in all candlesticks. We'll zoom in a little bit. Okay. Now we're going to look in the green circle. The candle is black because the closing price of the candle is higher than the closing price of the previous candle. But the candle is black instead of white. This is because the close on the candle is lower than the open. So the price for the day went up, but did not close higher than the open. Okay? So the close the day before was here. The candle opened here, and it closed here. So this area where it closed is still higher than the close from the day before or the previous day. But it closed lower than the open. That's why the candle's black instead of white. Then we have high of the day and low of the day, just like in the other examples. Now we're going to look over here at the pink circle. This is a hollow red candle. Remember that if the candle is red, hollow, or filled, then the closing price of the day is lower than the closing price of the previous day. So this candle, it gapped way down at the open. Then the price went up to close higher than the open. This is why the candle is hollow and not filled in. But it remains red outline because it closed lower than the previous day's close. So the previous day's close was here. The candle gapped way down, so the open the next trading day was here. Then we had a low of a day here, and then the price action pushed up and closed here. But this level right here is still lower than this level at the close of the previous day. So the price action for the day did go up, but from the previous day the price still fell a fraction. And that's why the candle's got a red outline. Now we need to move over here. Next we're going to look inside this aqua circle. This is simply a doji, which means that at the open and the close, the price were about the same. Dojis that are red or black show indecision at times. When they're found at the end of a big run or a big fall, they are often interpreted as possible reversal candles. When found at support and resistance, they should be watched closely. Dojis are very important at these levels. Do not ignore them. So again, we have a high of the day and a low of the day. It's a pretty good range. But our open and close are very close together, or at sometimes the same spot. And this is often a doji. And you can see that off of this doji, the reversal did gap up. And that's why they should be paid attention to.
Like Travis just said, dojis are extraordinarily important. You know, when you have a shift, when something's about to happen, it's often a doji that's been there beforehand.
Okay, we're going to move on to slide 6. Now that you know how candles are formed, I have to cover one particular type of candle before we go into support and resistance, because they're seen so often in all time frames, and they speak with such great volume to the trained eye at key levels. Have you ever been shaken out of a stock? Imam Assassin asked y'all that in his opening statement. I know that I have, for a fact. Have you ever exited a position with a loss on a break of support, only to watch the price rally back above the support area before the candle closed? I know that I have been there as well. This action often forms what we call shakeout candles, and they're very important to identify around key support levels. We'll move on to slide 7. The key level in this example is a support line that's on your screen here. It's this green line right here. This is a green line. This is the support. I know we haven't covered support yet, but we need to cover this first. Note that the blue circled candles where the low of the day was well beneath the support, but closed for the day above the green support line. This is called a shakeout candle because it was intended to attract sellers who believe that the stock will continue to fall because it has broken support. It also plays on the fear of those who bought around the support level and is intended to make them believe that they're on the wrong side of the trade. But then the stock rallies to close above the support for the day, only to run up for the days to follow. These candles are often found near support areas and oftentimes tell a great story for those who recognize and read them well. I'm going to go into a little bit more detail here. This stock opened. We just learned how candles are formed. So the stock opened here. But look at this low of the day. The low of the day went way down here. So you had this major shakeout where the stock was pushed down, and this candle throughout the day that it traded down here was a big red candle that had broken down below support. But by the end of the day, the stock closed here. And the high today was here. So it closed, not only did it close above support, it closed almost at the high of the day. Okay? And then look at the days to follow. So whoever recognized this shakeout candle and bought on this shakeout candle, look at the reward. Okay? This is what happened for days to follow. Over here, we're dealing with the same thing. I'm going to zoom out, and then I'm going to zoom back in on this other candle. Let's go over here. Okay, let's look at this one. Same thing. This isn't as big of a shakeout, but it went well below support. It closed above and almost in a doji, which we talked about watching closely at key support levels, and then look at the gap up and the days to follow. So whoever bought on these two shakeout candles did well.
That's what I do all the time. Everybody thinks something's breaking down. They just don't know how to draw proper trend lines. So when I said that even when experienced traders can get something from this class, people tend to so often draw very bad trend lines, very bad support resistance points. It doesn't matter as long as the only thing that matters is what's in the body. So what do I do on a day like that? I see it close bit above support. I'm buying. That's exactly what you should be doing. You know, this is hugely important. We just went through the doji and the shakeout candle. Two extraordinarily important candles that you have to know. Okay, continue.
I'm going to make a point here that we had a doji here, but it really wasn't at a major level of established support. We had a doji here, but it really wasn't at a major level of established support. We're fixing to learn about support and resistance. So even though you see these, it's not just seeing a doji and buying on that candle, because that candle says, oh, we're reversing. It's where the doji is located. But here we had a shakeout candle here, and then we came down and bounced off the support here. We bounced off the support here. We bounced off the support here, and then we shook out and closed above the support there. So it's the whole story that we're talking about, not just an individual candle. It's where the candle is located and what the story has told you up to that day that produced this type of a bounce off of this candle. Okay, I'm going to move on to slide 8. We can never allow ourselves to get into a rut of only a bullish bias. So I have to show you a shakeout candle on the short side as well. In most cases, it appears as a shooting star. This candle should be acted on at key areas of resistance. The shooting star that shoots above the key level of resistance but then closes below the resistance by the end of the day is the one to watch for selling the stock short. When acted upon, these situations can be just as profitable as the bullish shakeout candle that we covered in the last example, just on the short side of the stock instead. We'll move on to slide 9. Here in this example, if you look at the pink circle, there's an area that the price of this stock attempted to pass, but it failed. This is an area of resistance. Then in the blue circle, the candle broke through to a high above the resistance line for part of the trading session. But by the close of the day, the price was below the resistance line and slightly below the opening price. This is the shakeout candle. This is the shooting star. This candle, we believe that the stock has broken the resistance and will follow through. But the candle says different at the closing bell, and often this candle tells a strong reversal is lying ahead. Anyone who bought the shakeout in a bullish bias is trapped and will take a loss. This candle is also intended to shake out the shorts who shorted at the resistance and who set their buy to cover stop losses too tight. This is obviously the case here, as the chart reads in the 4 days following this shooting star candle. Candles tell you much more, as you will soon see. The wicks on the candles are what form the shakeout candle and the shooting star. They tell many stories at key support and resistance levels, and now we will begin to analyze basic support and resistance. So just to cover this one more time, this stock, a big white bullish candle, hit this resistance line, and it's obviously resistance because it didn't just reverse, it gapped down on the next trading day and continued to reverse. Okay? So we know that this resistance is here because of the reversal candle. See, this candle told us a story. When we gapped down off of here, that told us a story. That resistance is pretty strong. Okay? So we hit the resistance, we pierced through it a little bit, we hit it again, and we're right here at the resistance, but then we have this candle that breaks all the way through it. And not just a little bit, like right here, not just a little bit. It broke through it up here, the high of the day, okay? And then we closed at the low of the day, below that resistance. So what that tells us is a reversal could very well be coming. That's your shakeout candle on the short side of the trade. I'm going to zoom out 1 second here.
Look at all that cheddar that you would have made afterwards. Look at that pullback.
Look at this.
This is what I do all day. When everybody thinks something's breaking out, I'm going bearish. It's often due to not just my formulas, but something as simple as this. You know, do not get caught. I mean, it's you have to understand the basics. And if you know these three, if you know what a shakeout candle is, actually it's only two: shakeout candle, reverse shakeout candle, which you can call a shooting star, which is not always a shooting star, and a
A
doji,
multi-sector.
then you'll be
This
in
is
good
a
shape.
multi-sector commodity trust oil fund. This is not a fast-moving fund, but I just want to show you that you dropped from 34 to 29, so roughly a little more than 5 points in 4 days because of reading this candle properly. Okay?
All of these charts are current. Everything you're seeing here is current stuff. Look at the dates. Friday, July 8th. Everything that we're gonna go through is stuff that that you guys could have seen, and it's very simple stuff. Okay, continue.
Okay, we're going to move on to slide 10, and we're going to start on support and resistance here. The topics we're going to cover today are broken resistance acting as support. We're also going to cover broken support that is now acting as resistance. And then we're going to cover the basics on trend line support and resistance. When the price of a stock breaks an area of previous resistance on a candlestick chart, it will use that area of broken resistance as its new support line. In all time frames, the more times a price attempts to break an area of resistance, the stronger support will be for the price when it succeeds and breaks through. Now on to an example. In example 1, we're looking at a 1-year daily chart of HMA. Each candle represents the price action of 1 day. Look at the red circle. The price is trying to move higher than the 775 area, but the resistance is too great. Now we look over at the pink circle. The resistance was broken and the price elevated. But notice that a couple of days later, that the price retracted down to test the same area that it had just broken through. Often, and even most times, when a stock breaks through an area of resistance, it will at some point sooner than later check that area of support that was made to see if it'll hold. This is indeed the case here inside the pink circle. Okay, I'm going to stop right there and zoom in just a second, and I want to clarify this. Okay, so we have resistance here. It's hitting it and bouncing off. What is that? Look at that shooting star. We have a shooting star there, and it bounces off. It hits resistance here and bounces off. So, on this day, there's your breakout. There's your confirmation candle. It broke out. But what did it do the next day? The very next day, it shot right back down and it tested the new support. Look at the very next candle right here. It shot down and tested that area of new support. So when this line was broken, it then became support. And it was tested 1, 2, 3 days in a row before the advance. Okay? So once it broke 775 and tested it, and that support held, boom, off we go. All right? So just because you miss a breakout, I'm not saying you can't buy this breakout on this confirmation day, but if you want to scale in near support, then you're looking for it to pull back and test that broken area, and you can buy the rest of your positions right down here. Okay?
And to reiterate something, the reason why these supports work is because they're drawn by the actual body. We are ignoring the wicks. Ignore the wicks, guys. Everybody. If you're not using candlesticks for your technical analysis, then you're not drawing proper charts. This is very, very important, and it's basics. And like you can see, often you guys see me enter a position and then add on that pullback. I'm not going to go ahead and put a stop like so many swing traders do. Just put a stop at your entry. No. That's where I'm accumulating because I'm looking for that second attempt. And you almost always get that second attempt. Maybe it's another day, maybe it takes a couple of days, maybe it takes a couple of hours. You know, all time frames, it works everywhere. Okay, continue.
Okay, we're going to move up to the aqua colored circle. Notice how the same thing happens again. The price is trying to move above the 875 area for 2 weeks or so. Then in the green circle, it succeeds. Then also in the green circle, a week later, what happens? It retests the area that it broke through. Okay? So it's trying to break through here. And you got all kinds of wicks up here, but the candles keep closing down at support or below. Well, then it breaks through. All right? On this big white candle right here, there's your breakout with confirmation. Okay? And the patient chartist, he's waiting. He might buy a little on this breakout, but he's waiting. And this thing pops up, and a week later, look what we have. It comes down to check the support. It checks it on this day, and then it checks it on this day before going up. Okay? So it's the same scenario here, but it may not check it the first 2 or 3 days. Got to be patient. It ran up, came down and checked it here. So you buy the breakout, you average in, you scale in around this support area. You can set your stop down here, even below this shakeout right here. So you're risking very little, and then your reward is here. Okay? Low risk, high reward scenario. Okay, I'm going to zoom out and zoom back in over here. Now we're looking at the blue circle and see what the stock is trying to advance above the $10 area. And this time it takes some time to do so. So this tells us that if and when it finally does break the $10 mark and sustains it, that will be a good level of support because it was so hard to break through. In hindsight, it's easy to see that there are 2 areas of resistance in the blue circle. This is not always easily seen in real time, but should be recognized when considering entry when the stock retests these levels as new support. So we can see here that we have resistance here, and then we have resistance here, and then we have resistance here, and resistance again. So we've got a couple of different levels of resistance we're trying to break through here. Okay? Now we're going to move over to the orange circles. We find this to be very true about the support that it made. After the breakout of $10 on the first orange circle, it tested 4 times to date and has yet to break down below it. Notice that in the orange circles that it retested both areas of previous resistance. This is why detailed charting is so vital. Many would sell their position on a support break, not realizing that another level of support is so close below that's being tested as well. Okay, let's cover that. It broke the first level of support here. Then it tested it. Then the very next day, it broke the second level of resistance. Okay, so we have resistance here, broken. Tested new support. Resistance right here, broken. Okay, then it came back to test on this candle. But when it pulled back here, we got to realize that now there's 2 levels of support because there was 2 levels of resistance that were broken. So on the first retest, we test the lower level of the new support. Then on this retest, we test the higher level of support, the higher level of support, okay? Almost the higher level of support. Now we go over here, we tested the lower level of support. So recognition of these 2 resistance levels that were broken and are now acting as support is important here. Because on this breakdown here, a lot of people that entered may get shaken out on merely a test of support that's just below that level. So you have to identify when you scale into a position where the next level of support is. And realize that if this is broken, do I want to set my stop loss below the next level of support if it's that close, to make sure if it's tested I don't get shaken out. Okay? So if I was going to swing this and I bought on the breakout, then I would be looking to add on the support test 3 days later with my second buy. Remember this. Support equals buyers present. Nothing more than that. On level 2, the bids will be stacked all around it. The demand will be there for the stock. Supply will dry up and the stock will continue higher until the tides change. And then demand will dry up and supply will take its turn. This relationship between supply and demand is the foundation of support and resistance. So the reason why this price action finds support right here is because there's buyers there. And you'll see that when this is broken and you got this breakout, you scroll down your level 2 when this candle's pulling back, and you look right around this area where it broke out of, and you'll see the support. You'll see the buyer action there, and the chartist will wait and watch, and he'll be one of those buyers. He'll be buying here. He won't be chasing. He'll be buying down here at support, where he knows the stock has to close under just a very small fraction of the break of his support, and he can exit without being harmed. Okay, once we broke through this $10 level that was so hard to break through, it became such good support. So when we recognize these things here and we're patient, we say, okay, say we missed this whole leg here, the whole breakout. We missed the whole thing. Well, we got to buy an opportunity here at support. Okay, look at the run up off support. Then we could have bought here, we could have added here, and look at the run up off support right here. Okay, so then we're patient, and look at this. It tested support again, and look at the run up off support. So you have several buying opportunities just on this one chart by recognizing how hard it was to break through this resistance that became such strong support because it was so hard to break. Okay? This is what good recognition of support can do for you. This example has been on a commonly used daily chart that we look at every day. Now we're going to look at how this support works on candlestick charts in all time frames. Here we're looking at an intraday chart of the same stock, HMA. This is an hourly chart where each candle represents 1 hour of trading, and the chart is 30 days long. Most trading platforms offer these intraday charts in real time that you can customize to add the tools that you like on your charts. On this chart, the stock was in a downtrend from June 8th through the 13th, and it attempted to pop up on the 9th, but met obvious resistance in the 1060 area. So that was right here, in this area. It was in a downtrend, which y'all really can't see, and it popped up and found that resistance. Okay? You can see in the blue circle that this is merely the first time on this 30-day chart that the stock will meet and test this resistance area. You can see right here where it tried to pass this level and was unable. Okay, so it tried to pass it, tried to pass it, tried to pass it. Okay? Just like on the daily chart, but intraday instead. This is what I mean by reading candles the same on all time frames. The lower the time frame, the more forgiving you have to be, because support and resistance areas are often slightly broken and violated, and then close the candle inside the range of support. The higher the time frame, the more predictable. A trend break or hold on a daily chart speaks much louder than one on an hourly chart. Okay, back to the example. On the 13th, it opened lower and then began to work its way up, finding support around the 1017 area twice. These areas are shown in the orange circles. You see right here where the price went well below the green support line for part of the hour to make it seem the price would continue to fall. Okay, I'm going to zoom in and show y'all that. Okay, look right here. What is this? Didn't we just cover that? There's your support. Look at the shakeout candle. It's on an hourly chart, but it reads just like a daily chart. You got your shakeout, it closes above, and look what happens after that. Okay? Right here. Shakeout candle, hold support, look what happens after that. Okay? So this can be done intraday. The weak hands sell down here. The weak hands got shaken out. That's why they call it a shakeout candle. They sell, and the candle closes above support, only to attract experienced hands who buy as the price rises without the weak hands in play. These are common and happen often, so I strongly suggest identification of them around areas of support such as this one. Each time in the orange circles, support held and showed that the buyers were present under that 1017 level. Remember what I told you about support. Support equals buyers. In fact, they were so present that they did not allow an hourly candle to close below that support line. In the lime green circle, the resistance at the 1063 area was broken through with follow-through, but was tested with the wick of the fourth and fifth candle following a breakout. You see the retest here? So it broke through. Here's your breakout. Okay, but look at the retest. We just looked at retests on a daily chart. Now we're looking how it came and retested on an hourly chart before advancing. Okay. Inside of the red circle, support was tested again. So on this red circle, it came down and tried to test support. And then when it broke through here, we get a test of support there, and we get a shakeout candle at support here. Okay? So this was an area of resistance right here that was broken through, and now the support was tested, the shakeout candle at the support area, and support was tested here as new support. In the purple circle up here, we find more resistance. Okay, I'm going to move out and move over for y'all so you can see a little better. Okay, the purple circle, here we have more resistance. In the green circle, it's broken. Then also inside the green circle, the new support made is tested to see if it'll hold. This will happen over and over and over and over and over and over. I can't even tell you. It'll happen over and over again intraday. Look at the resistance. Resistance is here. It's obvious, right? We get a little, not so much a shooting star, but kind of like a shooting star where it shoots up above it. Nope, not going to break it. Pulls it back down. Test the support again here. Okay, runs back up. Now we got confirmation. Nice breakout. Are we going to chase this intraday? No, we're not going to chase it. Why? Because we're patient. We're going to wait on it. Look at this. Boom. 1 hour, 2 hour, 3 hours later, where are we at? Right there, testing support. So we can enter here, and we can know that if we close a candle now under the support, we can exit. So we're not entering way up here. We're getting in at support. Okay?
Too many traders get in too early. They see that breakout and they don't realize, look at how often you retest. Even if it's 4 hours later. That's when I'm adding. You know? People, do not get into your mind to put a mental stop at your entry because you're seeing profits. Because you're never going to be able to make it as a swing trader. Look at this. This tells you the story. The very simple stuff like being able to know what a shakeout candle is, doji, and reverse shakeout candle, with that alone, you can become a very successful trader. Very successful. And this is without SMA lines, EMA lines, you know, Fibonacci's, all the stuff that we'll cover in other classes. The basics are your foundation. And do this correctly before everything else. And do not be that guy that puts your stop at your entry Look at what you have. Step back and look at it. And like Travis said, further time frames are more important than smaller time frames. So always look back and remember where everything stands. And do this intraday, do this multi-day, do this multi-week, multi-month, whatever it takes to understand where everything stands. You know, if you can go ahead and draw a chart it like this in your head, you do it. If you need to chart it out manually, then you do it, because these things are obvious. They're very obvious. Just remember, it's all about the body of the candle. Do not be that guy that gets shaken out or that gets trapped. Okay, continue, Travis.
Okay, so I'm going to finish about this chart that we're looking at. So if I saw the breakout and I wanted to participate, you guys do not have to chase. Stocks often will pull back to test the resistance that they broke, only to find demand there in the form of buyers. You guys should be one of those buyers. When you buy at support and or scale into a position around support, it's always important to realize where the stock may go if you're wrong. Many people make this assumption that every trade, okay, I'm going to be right. Always look at what if you're wrong and where you're going to exit, and have a plan of action before you ever pull the trigger. You have to know what you're going to do, okay? It's always important to realize where the stock may go if you're on the wrong side. So if the support you bought is broken, then where's the next support level? And how far are you away from that level? Do you want your stop loss to be below the next level of support, just in case you get a shakeout candle that goes down to test the next lower support level? Remember, there's a difference between your support being broken and just being shaken out. You see that if you do not buy at support, then oftentimes you will not have the stomach to sit through a support test, and you will be the prey of the market. You will exit sadly to watch the shakeout candle form and the stock continue higher. Identifying support is an absolute must. Intraday candlestick charts come in the form of 5-minute, 10-minute, 15-minute, 30-minute, 60-minute charts. And this form of identifying support works on every single one of them. But listen to this. This is important to understand. I've said it once, but I'm going to say it again. The support on a weekly chart is stronger than the support on a daily chart. The support on a daily chart is stronger than the support on an hourly chart. The support on an hourly chart is stronger than the support on, say, a 5-minute chart. So you should always identify where you want to enter a position on a daily chart for swing traders. Then you can look at your intraday support on the 60, 30, 15, and 5-minute charts, realizing that the larger the time frame, the more reliable the support and resistance levels. Okay? So we always work backwards when swing trading. We identify on our larger time frames where we want to be, and then we scale it down to our smaller time frames to get more precision on our entries. Okay. I'll move on to slide 15. Now we're going to go the other way. Here we're going to discuss stock breaking down and support being broken. We need to learn how to sell a stock short without chasing it. This can only happen on a retest of the broken support level that will then be resistance on the way back up. When support breaks down, the same rules apply, except they're reversed. The longer that the support holds before breaking, the stronger the resistance it will become when tested on the way back up. We will also look at how completed uptrends can help us identify key levels in downtrends. I'm going to move on to this example. There's a lot of stuff on here, I know, but it's all important. Okay, I'm going to zoom in, say this area first. Okay, this will work for now. We're going to look at a 1-year chart of BK. This is a good example showing a stock that completed an uptrend and is currently trying to end a downtrend. On this chart, in both blue circles, you will see the stock broke through resistance while in the uptrend and created a level of support at these levels. So we had resistance here and then it broke through. So now what is this? This is support. Okay, we had resistance here and it broke through and now we have support. Okay. Note that in the green circles that the support made during the blue circles did not hold. In other words, the stock broke through that support that was previously made. Here's the good part of that. You can still profit here in these times. When the stock breaks down in the green circle, it immediately pops back up to test the broken support. And this area in black, in the black circle, is where the technical chartist sells the stock short. Okay? So we had support, we had support here. It broke down through it. We had resistance over here, so it should have been support here. Nope, broke down through it, and what happens? Pop. We pop right back up to say, okay, let's check it. Just like on the way up, it'll check it on the way down. So you don't have to chase right here. You don't have to buy in this area. You can scale in here if you want to dip a toe and, buy a position or a piece of a position. I shouldn't say buy a position. If you want to sell short right here and then add to it on the test, that's okay. But you can be patient. And I know it's patience because you got 1, 2, 3, 4, 5, 6 days later, it pops up here and retests that area. And that is where the technical chartist sells short, right here. If you sell short on the retest on this chart, you did very well. And you are able to set your stop loss at a very reasonable risk-reward relationship because you are selling at resistance and buying back or buying to close at the lower support. You already were able to identify support inside the blue circles. Okay, so this is what I'm trying to tell you. You have a good support here. So when it breaks down below that, you wait on the retest. So it tried to retest here, and then it did retest here. But if you sold short down here on the break, do you really think you can stomach a pop like this and a candle like that and hold that short position? I know I don't want to, so I don't want to chase this. I want to be patient. I want to see, okay, let's see if this thing pops back up and tests that level again. And it took a few days, but as soon as that candle closed under that resistance level, I'm selling it short right there because then I can set my stop loss right up here. Okay? And a shooting star might get to me, but this is my risk. I bought right here at resistance, and this is my risk right here. This is what I'm willing to risk. But look at my reward. Look at it. I know where the next level of support is because I already identified it over here. I identified it on the uptrend. So now I say, this is what I'm risking, and this is my reward. And when that stock hits down here, at the previous resistance that's now acting as support, all right, I'm out. I'm buying to cover. So I'm going to sell at resistance. I'm going to buy back at support. Okay.
That was intraday, wasn't it? Or is this daily?
This is a daily chart.
Okay.
This is a daily chart. Yeah. So look at the move you had on a daily chart because you sold at resistance. You didn't chase. Okay. This means, like I said before, we're going to buy to cover or close this short position down here in the purple circle. Okay? Then on the next resistance level, you're going to see that in the pink circle. You can actually sell it short again. So it's going to pop back up here, and we know that this is resistance because it was resistance here. And then it was support here because it came down and retested it after it broke through it. All right? So we can look at this consolidation here and say, and look at there. Oh, man, what is that? Look what I just found. Tell me what that is, guys. Shooting star. Look at it. So you see the shooting star? It closes down here below the resistance level. There you go. There's your signal because you identified it at a key level of resistance. So if you take a position here and you short this stock, you can easily write it down again here in the brown circle and buy to cover your short position. So you not only did it once, you did it twice because you could identify support and resistance.
And since you identified a shooting star, even if she bounces, even if you get back to break even, you continue to hold, you accumulate. Why? Because anytime that you see a shakeout candle or reverse shakeout candle or shooting star, that's what you do. It's that simple. You know, don't allow the noise of the market to miss the obvious that basics tell you. And that's a lot of money to be made, especially in the world of options.
And let me make let me read a story to you. There's a little book I got in my pocket, and I want to read it to you. Okay? That book says we hit resistance 3 candles in a row and did not break through it. So then we hit resistance this day, and we broke through it slightly. And then we gapped above resistance this day, but we finished down lower. So everybody who sold short on this level is feeling pretty good at the end of this day right here. Okay? Right there. They're feeling pretty good because it gapped over it and still closed below it. So the very next day, we got market makers. I'm sure y'all have heard of those. And look how high they shoot this candle, making everybody here on this short position say, oh, this thing's going to break through. But look where it closed. Let the candle close. Don't get shaken out. This is exactly what we talked about when we covered shakeout candles. Is this candle right here is meant to hit all the stop losses for the shorts, and it's meant to attract new buyers who think that this is going up, and it traps all of them. The shorts get stopped out for a loss just to watch the stock fall where they thought it would. And the bulls who bought it on the supposed breakout that the candle didn't close on, those bulls are trapped, and they got a stop loss and get stopped out somewhere in here. I would hope by the end of the day, after seeing that candle close, they'd be smart enough to get out of it if they bought it in a bullish bias, but you'd be surprised. So this is what that storybook will tell you when you learn how to actually read what a candle is saying to you. Okay, we're going to move on. I'm going to make one more little point about this area, and I hate to stay here too long, but I want you to notice that the resistance where we sold short before was here. And that shakeout candle, that shooting star, was pretty much a test of the previous resistance. Okay? So anybody who sold short here should have identified the next level of resistance above it and realized that a shooting star could possibly go test that again. So they should have had their stop loss, their buy to cover stop loss, just above that area. So it makes your risk a little bit higher because your stop loss is above that. But when you look at risk to reward, I think that I will take this risk reward any day of the week. If anybody out there can give me 2 or 3 of these a week to play, I'll take them. Just send them to me. Because that risk reward is absolutely beautiful. Okay? You're risking very little compared to the reward that you stand to gain, just by setting your stop loss above where that shakeout candle could shake to the upside. Okay? That's important. That's why we talk about, don't just look at the resistance you're at. Look at where the next resistance higher is. Where could that shakeout candle going to be tested? and make sure that you're outside of there and that you're selling at resistance. Because if you're selling down here, this shakeout candle, probably a little bit more than you can bear. Okay? You don't want to be selling down here before you get to resistance. You want to be going ahead and trying to get as close to resistance as you can when you're selling short. All right? Now let's move on. We're going to go down to this red circle. The stop breaks yet another support level. Okay? So we have a breakdown right here. See, we had support. It bounced off support here. It bounced off support here. It bounced off support here. And that support was pretty good. It was so good that it gapped down over it in order to break it. Okay? But what does it do after it breaks this support level? It immediately retests it. Does this sound familiar? Yep. It even retests key areas and downtrends as well. So you, the patient chartist, you're going to wait for the retest with the inverse shakeout candle that made many traders exit with a loss because they thought the stock was going to break above the resistance. But the candle didn't. It shook them out and it closed below the resistance, and the fall the next day was severe. Okay? Look at this. We had support. We bounced off of it 3 times, but it gapped down below it. Are you going to jump on this gap down way down here and chase this? If you do, you're only going to buy a small position because your whole intention is going to be to add on this resistance test. It was support. This is when we called it support right here. Okay? But this right here, this break, that gap, now we're going to call it resistance on the way back up. Now it's resistance. And look, it made all the shorts think, okay, we're on the wrong side of the trade. But they weren't. Look where the candle closed. Look at the next day. So whoever saw that candle closed and recognized this key area of new resistance, look at what happened. Look at the gains. Okay?
And even if you were the guy that got in during that pullback and you did an initial entry, you know where to add. You know, this is also one of the reasons why, if you know that, for instance, that you're not getting the best entry, that you're chasing it a little bit, but you believe it's going to continue a certain way, you get one entry, then you do your second additional, and your third, and your fourth. This is why we buy in tranches. We do not buy in one chunk or sell in one chunk. The people that do that, they're not that successful. The people that scale into positions, it doesn't matter if you're swing trading, it doesn't matter if you're long-term investing, I promise you they have larger profits because they have more understanding as time goes on of where key levels are. People ask me, how do I know where things are? It's because I've traded enough and I have enough positions to understand where the key levels are. Same thing with Travis. Tranches, entering in tranches in chunks is extraordinarily important. Okay, continue.
And I'm going to be honest with you guys. I'm going to tell you right now, on this day, we gapped down, right? Say this was on my watch list, and we gapped down. Look at the very same day. We gapped down, and what does the stop action try to do? It pushes up. Well, I'm going to tell you, that's close enough to resistance for me, okay? So the very first day, I'm going ahead and buying my first tranche, okay? And I'm probably going to scale in once we get this bounce back up the first day. But this right here isn't shaking me out because I'm looking to add at least a few positions along here. So this isn't going to bother me. Even this big spike up, that's not going to bother me because I realize I've already determined that this stock price action bounced off this level 3 times. So that support held 3 times before it broke. That resistance is going to be strong. So I'm going to be patient, and I'm going to scale in. I'm going to scale in. Okay, we get a bounce up. This day I think I might not going to have. Maybe I scale in here, and then we get this big spike, and at the close I see where it's closing. I scale in here. So where's my average? My average is right here. That's pretty close to support, right? If I'm buying 4 tranches. Okay, so if I got my stop loss above the high of this day, now once it made that big spike, I said, okay, if it goes any higher than that, I'm on the wrong side. So now I'm averaged in. This is my risk. Where's my reward? Okay, see that? That's how you do it. That's how you scale in. It's really not that difficult. You just have to have the mindset that you're going to accumulate around the area of resistance when you're selling short, and you're going to buy it to close at support. And even if you scale in there and you're look, where was I scaled in at? About, I'm going to say 27.80, and my stop loss was at above 27.36, so say 28.40. So I'm less than, I don't know, I know I'm less than 5%. Okay,
And
so
on top of that, you know that there was a area that was tested so many times and broken. So you're thinking, chances are she's probably going to continue past the next resistance line and go to the more important one even further out. So if you have that in mind, look at the amount that can be made.
yeah,
There's very large amounts of motion, and Travis knows that supports are tested again and again and again. So you didn't miss the trade that you thought you missed. Be patient. Your trade will come to you.
yeah, and
Do
this is
your
the,
entry, do your accumulation, and the trade will come to you. And even from the very beginning, all the way up there, if you had fundamental analysis or something else, look at the amount that you can make. You know? Okay, continue.
okay. You're going to find your next support level around the 26.50 area down here in this blue square, but it really never held. Because see, even it really didn't hold these days. So if you're scaling out of the position, you know, you may sell a third here, but then realize the next day, well, that didn't hold. So on this bounce back up, I'm probably going to scale right back in to the position that I sold here, because I never got rid of all of it. Remember, we said we don't buy all in one, or we don't sell it short all in one, and we don't buy it back to close all in one. So if we scaled out here at the next support level, but we saw that it didn't hold, then on any pop back up, we would go ahead and short that tranche back into it, and look how far we get to hold this thing, because we've identified support here, and we get to hold this thing and cover it down here in the 24s. That's huge. That's a nice trade.
Especially if the bodies themselves are within that trend line and the bodies are ignoring that support level. That gives you more of a reason to realize, you know what, this time I may ignore that support level more. So I'm not going to be so afraid of that support level. Why? Because the bodies, again and again, during that, inside that square, are ignoring that support line. So that's why you probably would end up playing it all the way down there. Again, every single one of those candles is telling you a story. All you have to do is listen. All you have to do is read the story. Read the candles, guys.
Okay, I'm zooming out for a reason. So you see here that this uptrend gave us areas to sell short for the downtrend, and that a downtrend here can give you areas to go long for an uptrend. And I'm wondering with all y'all if the light just came on right here, because it should have. Okay, I cannot stress the importance of support and resistance identification enough to all of you who are new or who are not so new. These areas of resistance that became support gave us so many beautiful trades. I mean, textbook trades, textbook. It doesn't get any prettier than this. On the downside here, you could have made just as much on the decline of a stock that has run so nicely as you could on the run up, through proper support and resistance identification and just reading what the candles tell you. Okay, I'm going to move on to slide 17. Okay, now we're going to look at the same scenario on an intraday chart, a 30-minute chart. It works the same way as the daily chart, but is basically for day trades. Okay? I want you to remember that we're always looking for low risk, high reward entries with a clear exit point. That's very important to keep in mind in all of your trades. Okay, let's go ahead and zoom in on the get-go because there's a lot of information on this. Okay. Here we're going to look at a chart on AGU. This is 30-minute candles over a 10-day period. Remember that when you read this chart, read it just as if it was a daily chart, because if I covered up the time frames, you couldn't tell me the difference. Remember also that we're looking for areas of entry that are low risk. So this is the sole purpose for good recognition of support and resistance. We're going to look here in these blue circles. You can see that resistance is broken. And then in the smaller circle where there's a wick of a candle that comes down to test the area of new support. Okay, I'm going to move through this pretty quick because we've covered this several times. I'm showing you. We looked at an hourly time frame, daily time frame. Now we're looking at a half-hour time frame. It's still retest. It's no different. It'll happen in all time frames. Okay. Again, the same exact thing happens in the red circle, and the two wicks test the new support area up here. I know you've got that pretty good. So we're going to use this uptrend to show us key areas to sell the stock short once we have an area of that support that is broken. Okay? Now look at the green circle. This happens to be a new day on the 10-day chart that opens as a gap down, and it gaps down below two green support lines that were built on the way up. So we didn't just gap down under this one, we gap down under this one. Okay? So we get the gap down and it opens here. But if you look here in the smaller green circle, you're going to see a wick that goes up to test that broken support line that is now acting as resistance. This is where the great scalpers sell the stock short for an intraday trade. Okay, right here. It goes up to retest, and they're waiting on it because this was your support. Okay? If you notice here in the pink circle that the chart gives us another chance to sell it short when that candle breaks above the resistance with a wick but fails to close above that resistance line. The next 30-minute candle is profitable for the scalper who sold the stock short at that resistance level. Let's look in this pink circle again for a hypothetical situation. Let's say that I shorted the stock exactly at the resistance line, but the next 30-minute candle pushed on forward and was showing strength. Because I was disciplined enough to enter at resistance, I sold short at resistance. I'm able to exit with a minimal loss because the stock price does not have to move very far away from my entry to tell me that resistance has been broken with confirmation and that I'm on the wrong side of the trade. I want out of it. This is precisely the reason why we sell short at resistance. We don't try to catch it here, okay? If we sell it short right here, and then our next candle is built, and it builds like this and closes, I said closes. I didn't say shoots up there and pulls back down. If we get a candle that closes up here, then we know that this has been broken, and we're on the wrong side of this scalp. Because this would be a scalper making this trade that I'm talking about intraday. Okay? That's why we sell short at resistance, because then we have to move a very small amount to the upside and close that candle to tell us that we're wrong, and we can exit without hurting our account. This is precisely the reason that support and resistance is so important to identify. It's the only thing, and I mean the only thing, that can limit your losses in an educated, technical way. If you sell the stock short before the resistance is tested, then you could easily get shaken out on a mere resistance test, only to watch the stock reverse and go in the direction that you predicted. It just does it without you, because you had a poor entry on the position. So when an area of support is broken, it is a low risk, short opportunity on the retest of that area. Again, we're selling the stock short at resistance and would cover at the lower support. This works in every time frame. And again, the larger the time frame, the more reliable the resistance will be to sell short. To review real quickly, when resistance is broken, it becomes a new support level. And when support is broken, it then becomes a new resistance level, no matter where on the chart that it appears. Okay? Move to slide 19. Now we're going to move into trend lines. Okay? Trend lines appear through all time frames on all types of charts. Trend lines do not show any bias as to which is the stronger trend line, the support or resistance line. But rest assured that many traders are watching the same trend lines that you are, and the bid and the ask on level 2 will often indicate this action. Price action in uptrends and downtrends will bounce between trend lines in all time frames. Trend lines are also present in the form of flags, triangles, top and bottom formations, bearish and bullish alike. We will cover these trend line built formations in future classes. For now, I just want to cover a few basics on trend line support. In this example, you can easily see how the daily 1-year chart of Nano has been trading in a nice up channel between two trend lines for months now. Again, this is a current chart, guys. I think I pulled this chart about the 5th or 6th of July, maybe a week and a half ago. Okay, it's a very current chart. This is pretty basic about trading between these trend lines, but it's very beneficial to anyone initiating a new long position along this bottom line pretty much any time in the last year. All right, the more times the stock bounces off the line, the more predictable it becomes. So you could have really, anytime it touched this trend line, you could have went long, and anytime it touched this top trend line, you could have sold short and actually made some pretty good trades. Okay, just on a basic trend line with no other analysis whatsoever. It's a pretty fundamental example. Okay, now we're going to move on. Now we want to look and see what happens when two trend lines intersect. This is the easiest way that I know how to explain it. Okay, what happens when you hold a 30-pound weight above your head with one hand compared to holding that same 30-pound weight above your head with two hands? Remember in this example that a resistance upper trend line will act as support once it's broken. It will often be retested, just like the horizontal support made from price action. Okay? This next chart is the same chart you just looked at of Nano, daily candles. Okay? I'm showing you this chart again because I feel it's very important for you to understand that more than one set of trend lines can exist on the same chart. I simply added one trend line. This was a nice breakout of that trend line resistance, and the stock broke the line in the pink circle. Okay? You see there's the same chart of Nano. I'm going to zoom into the area that we're discussing now. In this pink circle, you see this trend line. It hit it. It was started here, and then it hit it here, and then it rode right down that trend line there. So that trend line was well intact. Okay? It had its good 3 points and they were dead on. Okay? But look here, we have a breakout of that trend line. Now, we got a breakout. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13 days. It took 13 trading days to come back and retest this area. 13. Patience, right? So then a couple weeks later, it retested this trend line. This is shown right here in the orange circle. Okay? Just like the previous support and resistance, it will retest here as well. But the point where it retests is the exact intersection of the longer, stronger trend line that the time that at the time had been intact for months already. Okay, so you have this trend line and this trend line in the same area where it came down and retested. You got the blue bottom trend line and the downward blue trend line intersecting. When this happens, the odds of that support holding are extremely good. And you, the chartist, have just identified an area to enter with a low risk reward ratio. And isn't that what all of us look for? An area to enter a stock that will tell us if we're wrong without hurting our account. Okay? Okay. Let's say we buy 10 stocks in this same exact scenario. Okay? We're going to take 10 positions in this scenario. 5 of them break the support, both supports, not just one, has to break both of them, and they tell us we're wrong, and let's just say we lose 3%, okay, on 5 of them, half of them. The other 5 bounce off the trend lines, and we sell 2 or 3 weeks later for a 10 to 15% gain in each one of them. We win, guys. We win. We were only right half the time, 5 out of 10 times, but we still win because we bought so close to a place that the move to the downside allowed us to exit without making us bag holders. We have to buy at support. Okay? This is why. We buy at support. That way the move to the downside does not have to be a huge move to tell us we're wrong. Okay? That's why we do it. All right? This right here, where these two intersect, this is your one hand that's holding the barbell above your head, right? The 30-pound weight. Well, this intersection right here, that's your second hand. So when those two intersect and it tests that area, you got 2 hands holding that barbell above your head. That's the position you want to jump on and set your stop loss. All right, we're going to move on. We're going to move on to the next slide. I think everybody sees this. Anybody can draw this trend line, guys. The points of the stock action, the price action, and the candle closings, they told you where this trend line was. You just had to identify it. That's all you had to do. You had to identify it. Okay? Okay, let's move forward. Okay, now let's see what happens if we hold the same 30-pound weight over our head with 2 hands. But we also have a good friend. Okay, so I get on the phone tonight and I say, Assassin, I know you're 3 hours away from me, but I really need you to come up here and help me hold this dumbbell above my head. And he says, yeah, I'd love to. So he jumps in his Tesla and he runs up here, and he's got one hand on the dumbbell and I got 2 hands on the dumbbell, and now we're both holding it above my head. So I have greatly increased the odds that that dumbbell is not going to fall and hit me in my nose. All right. Now I know I'm, joking, but honestly, guys, trend lines often work just like this. Okay. So if you got, the more hands you got on that dumbbell, the less likely it's going to fall. So you're looking for the area of support that has the most support there to hold that price action up for you to take that entry. Okay? Okay, so we got the same scenario where 2 trend lines meet, but they also coincide with an area where previous resistance was broken to make new support. So now you've increased your odds even more. You've just added that friend to help you hold that 30-pound weight over your head. Okay? Technical analysis is all in the charts. You guys got to be willing to do your homework and let the chart tell you when and where to enter. Here's a good example. We're looking at a daily chart of AIRM. This is also a current chart. You notice by the date. Okay, it's trading between the blue trend lines, and there's a red downward trend line that intersects the bottom blue trend line right here. Okay, in the pink circle. At this same intersection, previously broken resistance is now acting as support, as shown in the green line. So we can look here. This was resistance, okay? And now it broke through here, and it's coming down months later and checking it as support. It was resistance, now it's support. Okay? The chart says the rest, and the intersection is very powerful. All right, let's zoom in on it. Let's go look what the chart did. Okay, we got resistance, resistance, resistance. It breaks through. Okay, it comes down and it meets. But you got a bottom trend line here. You have your bottom blue trend line here, and you have this area of support that was used to be resistance at the same point. I want you to look at this move. Guys, this is not a penny stock, okay? This is not junk. This is a company that's trading at a 19 PE, okay? Very inexpensive company. But look at the move. All right, we're talking about 15 points in just a few days. All right, you don't have to trade junk to make money in the market. You can trade quality stocks with good recognition of support and resistance. I know I've been discussing going long and short through stock purchases, but all of these support and resistance tools that we have covered today are used in options the same. At this very point that we're talking about in the pink circle, this is exactly where Assassin would short puts vertical and go long calls with a bullish bias and step in front of the crowd before the crowd jumps on, and he would maximize his gains by doing this at this support level. Okay, we buy in the quiet times and we sell in the wild times. We let everybody else be the bag holder. We don't want any part of chasing. Okay. All right. I'm going to move on to slide 25. I'm sure that by now there's many of you that believe in the support and resistance that we've learned about today, and its proven power in charting. Remember always that support equals buyers. Okay? Support equals buyers are there, or demand for the stock. Resistance equals sellers are there, or lack of demand for the stock, which is often called supply. This last example is for any of you who may think that this is a fluke. This is no coincidence. Let's go back to the chart of Nano where the two trend lines met. All right? Look at there. There you go. Two trend lines meet. And guess what else was there? Look at that level of support. Okay? By previous, look at the resistance here. This was resistance. This was resistance. Now it's acting as support. And the trend lines meet at the same spot. Okay? Just like in the chart of ARM, on this chart I'm showing you the powerful strength of multiple support areas that intersect. Anyone can do this. You just got to know what to look for and when to exit if you're wrong. Don't ever forget about that. When are you going to exit if you're wrong? You should always know that before taking a position. This chart of Nano shows it happening as recent as just a few weeks ago. All right, we all know what's been going on. We've been trading. The correction's in full swing. Fear is at its greatest. The technical analysis is telling you to buy, right? Look at it right here. This was in June. This is the middle of June right here. Technical analysis is telling you to buy in the middle of this correction. And he who hesitates at these strong signals usually does not get a second chance to enter. But he who enters at these areas of support intersection will either exit with a minimal loss on the breakdown of all three support areas. It's got to break three of them, guys, not one. It's got to break three of them, okay, to be wrong. Or he's going to exit with maximum gains. Put the odds in your favor and do your homework on support and resistance identification before taking your trades. All right? There's many types of technical analysis to be covered, and we wish to do so in a building block type order. We need to cover chart patterns, bottom formation, top formations, moving averages, moving average support on daily and intraday charts, three-dimensional charting through real time and different time frames, point and figure charting, a lot of these things that M. Assassin mentioned, before the class started. These areas are going to take many classes to cover in detail, and we all wish you the best in learning and sharpening your trading skills. All right, that's the end of this presentation for today, and I hope it's been helpful and informative to all of y'all. And I want to thank you in advance for for joining us before they start the question session.
Okay, we're ready for questions.
Hey, very good.
And again, this was a basics class. This was a straight up basics class, so I'm sure that a lot of people that already know this stuff. But I wanted to go ahead and make sure that when you do go through the basics, you go through them the right way, because a lot of people do the basics incorrectly.
Hey,
So continue.
very good, guys. Thank you again for both of you putting this thing on. A lot of similarities in the way we trade. We had talked about that last night. No trees.
Yeah.
But I did learn a few different things today. We're actually chatting in this other in our chat room as you guys were talking there, and we actually picked up a few things. So people were saying I was telling them why it's important to review this stuff over and over again, even though you might know it or in a different way, because we go a lot of the same stuff in some of those Saturday webinars. We may call things a different the candle by a different name, but the same type of principles apply. So again, great webinar. So I'll start with the first question. There was some confusion at one point, Assassin, when you said about to ignore the wicks. I think you were saying, I understood exactly what you say. So some of you guys understand Assassin is dyslexic, and sometimes he might say things a little bit different. Most of us that know him understand what he's saying. You had said ignore the wicks, but I think you were saying ignore the resistance and worry more about that candle setup in the wick to see if it's a shooting star setup. If I'm correct.
Yeah, I'll clarify that for him, since I know exactly where we can find an answer to that.
Perfect.
Real quick. What he is basically
we both
saying,
understand the no trees.
yeah, I got you. I understand him because I talk to him every day.
Yeah, same thing here.
Yeah. Okay, what he's saying is ignore this wick right here, because this is your shakeout. What's more important is that this candle closes above support. Okay? So this is all this in the circle is market noise. Okay? Now if this candle would have closed here, what he's telling you is that's what's important, is because if that body closed down here, then that's a support break, and it closed down there, that's when we need to exit, because now we have a break of support, not just a wick below support. And that's what he meant. He's saying focus where the body of the candle closes above support. Okay?
Exactly. I understood that exactly.
And one more thing that I was also meaning is often when creating support and resistance, it's good to ignore the wicks as far as support and resistance, because you get a better chart with if you wait for the actual candle to close, because that way you're able to go ahead and get a stronger understanding of where the real support is versus where the wick tells you that the support is. On support, resistance, even trend lines, you often have to know which. You can't ignore the wick, obviously, because it tells a part of the story, but you have to know which wicks to ignore. Because wicks can also confirm a trend line, but usually they're not as good to go ahead and be the beginning of a trend line, if you understand what I'm saying.
Yeah, I think we.
And often and too often I see traders shoot. Yeah. I think that too often traders tend to use the wicks for their trend lines, and that I believe is a mistake if they're not taking into consideration that the body supersedes it.
Yeah, and the close is really the more important thing. You can see the setups. One question that goes hand in hand with that is Fareed has a question. Those shakeout candles, and see they're called shakeout candles, but you might have heard them as a different name in the Saturday webinars, and you're correct, Fareed. That's called a hammer candle as well. So a hammer candle,
yes, of course,
and the shooting star that you talked about is just the opposite candle. It's just after a big move. If it's a big move down, you're looking for that hammer candle. If it's a big move up, you're looking for the shooting star candle, and those give you that change in direction. Okay. The good thing about those, the good thing about those, and why I like this HMA example, that's why I love this type of stuff. I always constantly try to learn from this. While you guys were actually going through this chart, no trees, we're actually analyzing it as well, because I've played a lot of $10 breakout stocks. And because that wick is so long, guys, on that candle, the other key thing to watch for, and that I'd be watching, is the $10 key level, because you broke above it and then you come back down. So as you can see, the times that you actually came down to it, you actually held nicely over that $10. To me, that would have been another good signal as well, because $10 is such a key level. And because of the webinar today, we actually might start scanning for more $10 plays. I said, wow, I used to scan for $10 plays. How come I stopped that? And I've been doing my own different stuff now, but scanning for $10 breakouts, $5 breakouts is actually another good way to try and catch these type of patterns. Okay.
Yeah, especially on that retest, because you've seen today how many retests appear in all time frames. Why would you not scan for that and be looking for that retest and a confirmation of that support hold and then scaling in? Those can be very profitable. You're exactly right, and it doesn't have to go far below $10 to tell you you're wrong. So if you're buying at 10.10 and you're giving the shakeout down to say 9.70, your profit potential is huge on a play like that at that key level.
Exactly. And earlier today, guys, before the webinar even started, me and No Trees were actually looking at some charts, and we actually saw eye to eye on RIM. RIM had actually broken up over 28 today. But I love how he looks at stuff to scale in, and you saw they kept talking about scaling in. Scaling in is such an important part to trading, and regardless of the size of your bankroll. It's easier as you have a bigger account, but you should at least have at least 2 buys that you can make. And I go through this a lot, even in our chat room, about scaling into a position, scaling out. So at least you're just trying to get a move on a stock. It doesn't matter if you're catching right at the bottom or right in between there, as long as you're getting a nice range. And today, remember how we were talking about the RIM, and it was well below 28 when we were looking at it. But an important thing to try to understand about that scaling thing. The other question is from Rob. Hi, it seems some of the trend lines drawn, like the top one, is drawn to the wicks, or are you guys using Fibonacci retracements or just key levels?
This was all of the trend lines were drawn at just key levels of points that were made. They're not necessarily drawn to a wick or away from a wick, but a wick will often come down and test a trend line. So it can be part of forming that trend line if it lines up with another 2 areas that say closed at the base or the opening of a candle. So you can take the opening of a candle and then months later a wick, and then months later say the close of a red candle, and when those line up, you can form trend lines there. And you're not you're not looking for so much of you're looking for a trend line, but what you're really looking for more than that is if you can get that trend line in an area and then find a key level of support that the price action is pulling down to, and enter around where those intersect. It doesn't have to be to the penny. It just has to be scaled in around that area. So then you know if both of those levels are broken, you're on the wrong side of the trade. With a minimal move to the downside, you can exit quietly without hurting your account. But your upside is much greater. So it puts your risk reward at least to a, say 1 to 4, 1 to 5. Some of the risk rewards in this class were probably 1 to 8. I mean, literally, if you scaled in properly.
I would add to that question, trying to understand what it is that he meant. Kind of goes into that first statement that I made to ignore the wicks. You can't ignore the wicks, obviously, but the wicks are not as good for showing you support resistance than if you start drawing from the body, because the body can give you so much more.
Right.
It can tell you so much more. Wicks will come back to it, often go above it, but the body. That's why I implore you guys, wait for the candle to close, and then by the close you already see, wow, there's a shakeout candle, or whatever you wish to call it. I've used to call it shakeout candle, so whatever, or a shooting star. I call it a reverse shakeout candle. Bottom line is, if you wait for it to close, then you know what to do, and then you know, okay, right close to the close, what to do, where to position. The wick is more to distract you than the body itself. The body, I would say, is more important than the wick in many ways.
Next question, which I'm sure other people might have, especially if you're listening to the tape version, and depending on when you listen to it, we might have had more of the webinars. the best way to keep updated on that is either check my Twitter account, twitter.com/stockguy22, and I actually posted a message for you there, Matt, or twitter.com/MMAssassin. Okay, and you can either go to his site there, which is on his Twitter account, or our site on my account. We also have webinars right on our site, and we're actually updating them now, so there's going to be much more on there. And we're planning more into the summer, both with Assassin and some that I'm going to do on Candlesticks, Fibonacci retracements and stuff, and scanning for actual stocks. The other way you can go is right to Assassin's Assassin's site, which is Traders Playground. So again, you'll see that there. He also has a YouTube channel, so if you just search on Google Assassin, make sure you use double S's, double M, okay, and you'll actually see his YouTube account, okay, and that's the other way where you can get him as well.
If this class seemed to be a little bit slow, it was because we wanted to go ahead and go through things that you need to learn, but also we wanted to make sure that somebody who's never done technical analysis before, like for instance, Travis used his wife, and he was trying to show, and she got lost. So we changed the class so that she wouldn't get lost, brick by brick by brick, until we're doing wave theory, until we're doing PNA, until we're going through you know, how to go ahead and customize your different technical indicators to different time frames, how to do everything. You know, even how some of my friends have created their own formulas that you can go ahead and download into your Thinkorswim platform, into your Interactive Brokers platform, if you have NinjaTrader or whatnot, from the very beginning to the very, very, very advanced. And that might be 7 classes down, but every single class before it is a strong and important building block to the class that comes afterwards. And me and Travis will make these probably maybe every couple of weeks, or maybe it's going to take a month per, because we're going to go ahead and make sure that they're done correctly.
Another question by Alex on Nano was, Nano seems to have had a lot of runs, back up through support, return resistance. Where would stops have been on those, i.e. the breakdown to 1546?
Okay, let's.
So I think he was talking more into that March.
Yeah. Z, you think he's talking about where would the stops have been here?
Yeah, I think that's what he was talking about.
Let me go to the last one.
On the breakdowns, I think more into March. Where's that 1546, is that? Yeah.
Where would the stops have been?
I would use the whole number. I like to use, like, say 15 is such a whole number to me. $10 is a nice whole number. And actually, those of you in my chat know that I like to look at those 80-90 rules. So 1480, 1490. You can actually see that's exactly where it held. So even if you didn't understand that, just under a whole number is usually a good place to set your stop, because if that 1480, 1470 broke, you're going straight down to 12. There's not much support in between there.
Right. The only problem that is here is that at this point in this area, that you can't see the rest of the chart to your right. So at first glance, can everybody still see my screen, Frank?
Yeah, I can still see it.
Okay, let me draw something here. At first glance, this looks like a support break, but in hindsight, if you look in hindsight, there's actually another trend line that's actually forming right here. Does everybody see that?
Yeah, I see.
It's not straight, but it's actually a wedge formation that's coiling up. This is getting, we're going to cover this, but this is kind of like a coiled spring where it gets from wider and narrower and narrower and narrower, and it gets down in such a fine range. And if somebody did not identify this, they would actually think that this was a support break when actually it was a mere shakeout down to that other trend line. Okay? And also,
we just didn't want to populate too much into the charts here, and we didn't want to go into wedges. We didn't want to go into wedges this class. We wanted to go and keep it more simplistic. But yes, and if you were, and that is a very simple thing to draw out to be able to see, you know. But you wouldn't know that the first time
you
that you thought that support was being lost.
Is your chart would be ending right here. So you have to imagine that you can't see any of this. So on at this level, it looks like a support break. So, honestly speaking, I probably would have gotten stopped out of this, but I would have gotten stopped out at a very small loss. Okay, but when it popped back up and showed me the very next day, if you look at it, you see that hammer candle, you call it, or shakeout candle. Then I probably would have been watching this closely and repositioned myself and made all my money back up. Okay, but
Also, you would have gone long. I think Alex was thinking that. Wouldn't you
yeah,
have been shorting under 17, or as it came back over 13 in October?
yeah. You see this? What I'm saying is I would have gone when it popped down
Yeah,
here.
zoom in a
I
little.
would have gone short on the. I don't know why I don't zoom into this so they can see better. Give me a second. One thing about us is it's full disclosure, okay? So on this candle, when it broke support, the next candle, if you can't see the hard right edge here, this is a shooting star, okay? But it's giving a false signal. So Travis is going short right here at resistance. Well, the next day, I'm going to get stopped out because I'm realizing at this point that that's way too much strength to follow a shooting star. And also, this candle is closing above the support that I thought had broken. Okay? So when that happens, I'm going the other direction. I'm only going to scale in at this point, but I'm going
And it
the
only
other.
takes one candle to tell you to do so. That one candle
Yeah,
afterwards is all you take because you know that what you thought was a shooting star was
yeah.
not.
What I thought was a shooting
Or,
star.
or, or a reverse shakeout candle, whatever you want to call it. But it wasn't. And you found out right away.
One
But
thing I'd like to note on that is I follow a lot of these, and even with the invest psych said you guys are calling them sometimes shooting stars, sometimes hammers, sometimes shakeout candles. That's why I said earlier, invest psych. It doesn't really matter what you call them. Just notice what the patterns look like. They look like a hammer or upside down hammer, or sometimes they
well,
look like a cross, which is a doji. Okay, that's what they're
mm-hmm.
talking about. But we'll go into more detail. What I
Yeah,
found though with these type of shooting stars, since it's after a move down, a lot of times they fail, Travis, on these. I've done them many, many times. That's why they're most strong after a big move up, the shooting stars. Hammers are much stronger after a big move down. So see how when you have that
absolutely.
move, to $11 and then it bounced to 1092? Well,
Yeah,
that's a perfect hammer just over
right.
there,
Same with this one
right
here.
there,
Same with
same
that
there,
one.
because you drop
Nice
down
hammer.
and then you come up. So they're better after big moves. So always think,
Right.
guys, after big moves up, look for shooting stars. After big moves down, look for uh, the hammer patterns. Okay, or Satson calls them shakeout. Doesn't matter what you call them. Okay, they're the same thing.
If I bought this long at support, then it doesn't matter if I get stopped out here. And if I sold it short here, it doesn't matter if I get stopped out there. Because I bought at the key level of the support or the resistance, it doesn't matter to me if I get stopped out for these small losses because I didn't chase and it doesn't have to move forward to tell me that I'm wrong. If we look back over here, do you see where these candles closed over here? So we actually had a little intermediate area of support, which I guarantee you, if I let my computer draw that line, it lines it up with the bottom of this candle. So
Exactly.
identification of other areas of support and resistance are so vital. But what's more important
I thought that was exactly what you were gonna go
is
to.
it.
So for
But
instance, when Alex was mentioning where do you get it stopped out, try to have more than one support line
right,
and see and use the bodies of the candles to go ahead and create more of the story, and then you get a little bit clearer of a picture. That way you have not just one support and resistance, you have the support and resistance intraday close to them. And you can do this on so many charts, and that is what gives you a bigger understanding of where you actually get stopped
well,
out.
and a lot of like what
You
Frank
know.
says, don't show up to build a house with a hammer. Don't show up with one tool. You're going to show up to build a house,
Absolutely.
bring the whole basket of tools with you. And that's what you got to do when you trade. You get an arsenal,
But
you
I
get an
can
arsenal of tools that work for you, and you take those tools to work, and then your success rate is much better.
But what I have to tell you is, even if you know little, even if you can only identify support and resistance, you can be profitable in this game. Especially times like where you have several things coming through, because that calls for, like you can see on those circles, big moves. Small things, small simple stuff you need to pay attention to. And you don't have to trade every single thing. You can wait weeks, you can wait months for the perfect entry. That's why me and Frank are kind of mad at ourselves, because we didn't, me, I was looking at Google for a long time, and Frank was doing the same, and we're kind of mad at ourselves because we didn't profit off something that you wait months for. Anyway, I'm gonna stop recording since the recording is getting a little long,